Hello.
Good morning.
Good morning. Hi, Marla. Hi, Krishna.
Hello.
And here comes Joanna. Hi, Joanna.
Hello, how are you?
All right, good. I had trouble getting on this morning. Did you all? Okay.
Yes.
Hi, Ivan.
Yeah.
Great. We'll give everybody a few minutes and then we'll get into this riveting presentation. Be sure and have some paper. I'm going to put on the screen some of the information, and what I would tell you to do is, does everybody know how to take screenshots? It will be helpful to take the screenshots because then you can print out what you're seeing from me, and it will make a lot more sense. So, and hi, Chelsea. She's on mute. So
Good morning.
good morning. There you go. All right. We'll give it another minute. Did you all have a good weekend?
Yes.
Yeah.
Good.
Busy.
I
So for a MacBook Pro, does anybody know how to take a screenshot?
Yes,
I have one.
I do. It's Shift Command 4.
Shift
No.
Command 4. Thank
Well,
you.
mine's Shift Command 3.
Okay, so Shift Command 4 or 3. Okay.
I've got
You'll know
an
because
extra-
it's got the little X in it.
the little X. You mean the number
Like
sign?
Yeah, like a
Oh, that's a
compass thing.
3. Yeah, 4 is a dollar sign.
Yeah.
Huh. Maybe they changed it because that was mine. Oh, cool.
Okay.
All right. I'm gonna choose you as a host, and then I have to go coach somebody else. Okay.
Okay. All right.
Awesome.
That way I can share the screen, correct?
Exactly.
Right.
And sign a new host. Okay, you're good. Enjoy,
Okay.
everybody.
Okay. All right. Let's go ahead, and I'm the hostess, not host, hostess. Let's share the screen and let me go into. Let me get out of here. And what I'm going to do is, do you all see my net to seller? Great.
Yes.
Great. Okay. All right. What we're going to do, this is the easiest hard class you've ever had, or the hardest easy class, whichever way you want to put it. It's really not difficult. People make it too difficult. So hopefully I can explain it to you where you now feel very comfortable with it. But what we're going to do first is, the reason you do the net to seller is because you have a listing, correct? So for those of you that haven't had listings yet, you're going to be way ahead of the game, because a lot of agents don't know how to do net to seller. I'm always surprised that the sellers don't want to know what they're going to be getting, especially when you're getting multiple offers and you're trying to compare. This is where this makes you look like Einstein. So anyway, what do you think you need to do a net to seller? And this is, I want everybody to take their phones off mute unless you have crying children or barking dogs. And then you can just come in and out. But what do you think you need to be able to do this?
Their mortgage that they still have.
Right, their mortgage statement. That's correct. And you may need their tax bill, because if their mortgage statement doesn't have taxes included in their mortgage payment, then it's best to have a tax bill. Now, I do both of them, even if they have a mortgage payment that includes taxes, because what can taxes do?
Change.
They can change, they can go up, and they can go down. Why would they go up? Okay, I'm going to give you a hint.
If property
Is
Is
value,
it because, sorry,
Yeah, no, go ahead. Krishna, I think you started to say something.
yeah, I was gonna say, is it because the value of the property goes up?
That is correct. They get reassessed. They also, if the house was built in 2020, sometimes the tax bill reflects only the property itself, not the improvement, the dwelling. So you have to be careful on that too. Sometimes there's a delay in that. But if you see that you list a house that was built in 2019 and the taxes seem artificially low, it's because the new tax bill hasn't come out at fully assessed. The other reason a tax bill would be artificially low or potentially low is because they're a senior and they no longer have to pay school tax. That is only true in Cobb County, in Cherokee County, not Fulton County, not Gwinnett, I don't believe, not DeKalb. So again, these are just little things that you know that you can, if you know it, you can have a better conversation. Does that make sense to you?
yes.
Okay, so let's just, before we go any farther, what do you need? You need the most current mortgage statement, and you need the tax bill. So those two things are going to give you numbers to work off. How many of you know each county's tax cycle, meaning when it is due? Not many. And you don't need to. If you work in Cobb County, it comes out in August, it's due in October. If you work in Fulton County, comes out in August, due in October. Cherokee County, it's due in December. And these are things that, you know, as you work along, you're going to get better at it. Remember I said it was the hardest, easiest form to fill out? These are all little things that if you know, you can do it without thinking. If you don't, you may have to check. And who would be a good resource for you to check when a tax bill is due? Let's just say it's 10 o'clock at night and you don't know this county. What could you do? I'm not answering this one, so
Google it. Google it.
Google it. Thank you. That is exactly right. Do you know how many questions I get asked that I'm going, now I'm of an age where I did not start with computers, but I do know to Google things. Now, not everything can you Google. Don't Google contract questions. But I mean, tax information is pretty easy to Google. So
Would realist help? I'm sorry.
would realist help? Not on the date, the due date.
Okay, true.
Realist would show you what possibly the last tax bill was, but it won't help you on the tax date. But good question. So
Michelle, before we move forward, can I request you, can you share this document with us so that way we can just directly take notes in that?
okay, which is up on the screen.
Yeah, that document, can you just put it in the chat box so we can all just download it?
Okay, well, you tell me how to do that,
Oh.
because if you'll tell me how to do that, I will be glad to.
Okay, so you can click on the chat box on the bottom.
Okay.
And on the Zoom, you should be able
Yeah.
to see a chat box.
I'm not seeing my chat box, but
I think you're looking at the pages, not.
Next to
Oh.
participants, Michelle.
that mine says polling. Let me go to more.
Maybe because you're
Oh,
sharing the screen.
Exactly. exactly. Okay, so
How
now
many
what?
later you can send it?
Okay, so now it says everyone in my chat box. What do I do?
Okay, now there is, next to everyone, there's the thing that says file.
Yes.
You can click on the file,
Okay. My
and
computer.
then wherever it is it saved on your laptop, on your computer?
No. Well, it's on my desktop.
Yeah, so you can click on your computer, and then it'll let you select the desktop, and you
Okay.
should, oh, there, thank you.
Oh, and see, thank you all. See, I learned something today. This is great. I thought I was so clever learning how to share my iPhone on the screen when I was teaching a class the other day. So are we good on the net to
Yes.
seller? Okay,
Yeah,
perfect. Okay,
thank you.
thanks. All right. So we know what we need. Why would the different types of financing make a difference in calculating payoffs? Because this is what we're going to estimate a payoff, because we have to do that to give the net to seller. So why do you think different types of financing matters?
Different APR.
Not so much the APR, but that's a good guess.
Because
Let
the
me give-
PMI in the FHA and the
On the
PMI.
no, but again, good guess. The reason being is on conventional loans, the daily interest, which affects your payoff, is calculated daily. So when that payoff is received, that interest stops ticking and that loan stops ticking, is paid off. FHA and VA, if you're ever taking a listing that's an FHA and VA, that their calculation is always the loan balance plus 30 days of interest. So if when you are trying to calculate that, let's just say something was going to pay off on the 10th. On conventional, it would be the 10th plus whatever days it took for the payoff to arrive at the lender's office. FHA and VA, it would be plus 30 days. So they pay for the entire month. So that's a little thing that you need to know, else your payoff or your estimated net to seller when you do this is not going to be correct. It will be off. So if you'll just make a note of that, all this is going to make sense when we go through it. But you just need to know at this point, FHA and VA have different calculations on how to pay a loan off, okay? Make sense, kind of?
Yes.
Okay, so that's why the different types of financing matters. Have anybody heard of Georgia Dream?
Yes.
Okay. Georgia Dream, especially for our new agents, is a great program. It allows someone to get a mortgage with assistance with down payment. The trick to it is when they go to pay the loan off, that they have a silent second, which means they never made a payment on it, and it's sitting there behind the first mortgage. So if you, and I'm just kind of pretending here, if the first mortgage was $100,000 and that was kind of the balance, we'll get into that, there is going to be a second behind it, maybe of $5,000. And I'm just making up numbers. Don't write numbers down because it won't make any sense. And so their net to seller will be affected. This is really important to ask. Obviously, if you're doing a home buyer, if you're doing a listing where it's what I call affordable housing that meets the lending criteria of affordable housing, then you want to ask that question. Do you have a second mortgage? Did you get any down payment assistance? Because what happens if you get to the closing table and that pops its ugly little head without you having that discussion? What do you think happens?
So
Well,
he's
we
gonna
are
wonder why you didn't tell him.
Wonder why you didn't tell them because you're the expert. What else happens?
They're gonna wonder who's gonna pay that $5,000 because they
Yeah.
weren't working on
Yeah,
it.
believe it or not, I mean, they borrowed it. They kind of forgot. They didn't share that with you, but I actually had to take over not take over, but I had to answer one of our clients' questions while they were sitting at the closing table. And her question is if you all are professionals, why didn't you know that I had a second? Well, we don't check titles, do we? That's not our expertise. And I said, we don't check the title. And she goes, well, you should have known. Well, if you ask the question and they say no, then you've asked the question. But what can happen is they might be short of money. They might not be able to close the transaction without paying money. Or they may look at you and say, well, give me some of your commission, Mr. or Mrs. Professional. And that's what this person was asking. Or worse yet, that they have a closing right behind it and they were counting on that money to go to closing. So, oh, that was sweet. We have a famous movie star now. Anyway, so do you see why this is an important question? Now, don't ask necessarily somebody that has $1 million home, did you get a down payment assistance? Would that make any sense? It wouldn't
No.
make it. Yeah, no, it wouldn't make any sense at a certain price point. But again, these are questions you want to ask so that you are the authority. Interestingly enough, this next question has reared its ugly head again. It says, has the seller gone through modification? I want you to write by that also loan, kind of put a hyphen or pause, because with the COVID, some of the lenders allowed people to pause their mortgage. Now, it doesn't mean that they're not going to have that owed. They will owe it. But it adds to that bottom line. And I actually pulled an example today of someone that paused their mortgage. They said, I don't have to pay interest on it. There's no penalties. I'm not getting... Well, guess what? You are paying interest because you're always paying interest. You might not have a late payment, but this took a dramatic change in what they thought they were going to net. So this is important. So just right next to the modification, kind of / pause. And by pause, if you need to, write COVID. Before, the modification was between 2008 and 2012, people couldn't pay their mortgages, and they did a modification rather than losing the house, meaning that they took kind of a second behind the first. So all of these questions, all I'm doing is just trying to give you an idea of how to have a good discussion. If you don't know what to do with the discussion, you can come to me. I can explain to you what that means so that we can ask questions further. So I'll be glad to be your resource on it. But if you'll ask these questions, it'll keep you from getting in a pickle. So let's stop for just a second and let me go down to where I am talking about the pause. See this? Can you see this loan statement?
Yes.
Okay.
Yes.
All right. Watch my cursor and notice where it says past due payments. Okay, before they decided to pause this mortgage for no good reason, They did not lose their jobs. They did not lose part of their income. This couple is retired. So their income kept coming in, but they thought it was kind of cool not to make payments. Well, that, I mean, they could. They said that they were affected by the COVID, I guess. I don't know. But what happened is, see where it says, can you see where it says 229?
Yes.
856.76? Now they not only in June were going to owe their normal payment of $1,570.43, they now owe another, because the time is up. They only got 3 months reprieve, and they owe $3,140.86. And I say that 2 months. So now they owe $4,711.29. What normally happens with a mortgage is that as you're paying it, making your monthly payment, part of it's going to principal, part of it's going to interest. And the part that goes to principal does a reduction of your balance. So if you came down here and you looked, well, they're not going to show it because there was no principal reduction. You would see a part of this amount, the part of the, well, here it goes. I'm sorry. See where that says principal? Every time they were making a payment, the principal was reducing roughly $354.20. Every time they make a payment, it reduces a little bit more, a little bit more. That's why they call it fully amortizing. And then the other part was going for interest. Well, now they didn't have to make that payment, but they had nothing to principal, nothing. So if they were going to pay off what was owed, they had to pay $4,711.29. I'm going to jump up for a second. This is all going to make sense when we tie it together. But we said that their balance was $229,858.76, right? That was on the statement. So
Yes.
that's what you look for. But guess what? In this case, the date prepared, this net to seller was 7/15. I just did it the other day. And their projected closing date is August 20th. So they're then going to be 5 payments behind.
Mhm.
So you had to add $9,421.29. So do you see why you want to look at a mortgage statement to see where they're at? Because if my statement said it's due on June 1st, by the time we get to August, how many more payments have we potentially missed?
4.
We missed, if we didn't pay June,
Yeah,
we
because there
missed
were 2
June,
before and 3. 4.
July, and August.
Yeah.
3.
So if this gets a little complicated, again, not everybody's going to have this scenario. So I'm giving you the worst case scenario here, but you just have to know. And what I would do is, rather than try to guess the first go around, just bring it to me and we'll go through it. Okay. So anyway, in this case, whereas if they had kept making their payments, that $229,858 would have been a little bit less. Maybe it would have been $229, assuming there were 3 more payments made. But now they owe almost $10,000 more. That would be a horrible mistake to make, because when I talked to this person, I said, what is your loan balance? And they said, oh, we only owe $229,000. I said, I need a mortgage statement to see that. Oh no, I know what it is. It's $229,000. Can you imagine if I hadn't looked at that to prepare this, how terribly off we would be. So, all right. So anyway, back to the statement. Normally you will not have, or you hope that you won't have the past due amount. Just simply take the mortgage statement, and let's just say on this case, they were going to close on June 30th. All I would need to do is take the balance plus 1 month's principal and interest, which you just add the principal and interest together, and that will get you pretty close to what a payoff should be. Why do you have to add 1 month's principal and interest to this loan balance?
Is it because it's FHA or?
No, but I mean, that'll add to it too. No, because mortgage payments are in arrears or after the fact. So your June 1st payment actually covered May's interest. And so then the clock starts ticking again. And so by the time you get to the 30th, they had a whole nother month of interest. Now, we're not going to go in. There's all sorts of things. If you've got a VA or FHA, please come to me because I'll show you. Because if you miss paying the loan off on the 1st, there's a whole nother month. So you want to make sure that not only did they have to pay in arrears, but you want to make sure that payoff is received on or before the 1st of every month, else they get another 30 days. So it can get kind of tricky. But you can see now we've pointed out the things that you need to look at in order to calculate or prepare a net to seller. So let's go back to the net to seller, and I'm jumping back and forth, but we knew that we had the 229, 858, 76. I had to add 9,421, 28. So now we have a estimated payoff, estimated of 239, 280, right? Pause that. Let's pause. Let's go back up here. What if I had had a silent second? There's no interest on those. They just sit there. And so you need to know, you need to have put that second in right here, the second mortgage payment, right on this line. But we didn't. So I'm not going to worry about it, but you do need to ask that question. They did go through a modification, so we put that in there. So when do you think that you should prepare a net to seller? I'm going to make you think, and I'm not going to answer it for you. When should you do this?
When you get the offer for the listing?
I'm sorry, Marlon?
When you get an offer, so you can discuss with your client what amount.
Most definitely. When else?
Bella has decided what to like.
Before you actually list the property, so they know what to expect, maybe?
Krishna, that's a great answer. Actually, what I tell them is if I list your property, now I'm not listing anymore, so this is, but I would say at the time of listing, we will prepare a net to seller because we want to go over this and at least be prepared for when you get multiple offers, we have a starting point. So good answer, Krishna. So when I was doing it, I would actually prepare it twice. I would prepare it after I took the listing, and then I would also prepare it when offers came in because we're going to guesstimate certain things in that offer. So what I mean by that is we know now we have this figure, but now we have to do the cost of sale. So if Krishna and I were preparing a estimate, a net to seller, and she had just listed this property, we need to kind of guess what the seller needs to expect, correct? Because we don't have anybody we don't have an offer on it yet. So what I would do is on the seller contributions at closing, I would look in their neighborhood and that price point and see what was kind of a average customary cost for closing. And what that meant was when I have the discussion with the seller, I would say, you know, this is not to mean that you're going to pay $3,000. It just means that if we budget for this and you don't pay it, your net is going to be greater. If we need to, but if you get an offer that's $4,500 asking for closing cost and you're okay with it, we start adjusting. It's kind of like if you prepare, I used to say when I was in the mortgage industry, if you prepare for the worst and you're sitting at closing and you're making more money, your client's happier, right? So this is just to give them an idea. And I've had many a seller argue with me, I'm not paying closing costs. If they can't afford this house, they shouldn't be buying it. Well, the fact of the matter is that, you know, some people can afford the house. They just have a lack of resources or limited resources. So this is just a number to kind of give them an idea. Unpaid property taxes. Remember I said to get the tax bill? In this case, this particular person, their tax bill was higher, but they actually get to have a senior reduction this year. So if I put way too much in, it wouldn't make any sense. And I just simply got their notification from Cobb County and it said it was going to be X amount and calculated. I did 8 months because it's through the end or through August 20th and calculated 8 months. I don't do it and get down to the minutia of per day. You're better off just figuring whole numbers. So if let's say if your taxes were $1,200 for the year, what would it be monthly?
1,000 something.
$100.
It would be $100 per
Well,
month.
$100, sorry.
Yeah, no. You were on the right track. I knew what you meant. So you would take 100 times, if they were closing in August, what would you do?
800.
It would be 800. That's right. So you use that number there. Special assessments, those would be if they're in an HOA, that they have a special assessment. You don't see that very often, more so with condos. And condos, you know, are just a whole different thing. But in this case, it was 0. Survey, you know, if they agreed to pay for a survey, that's one thing you don't see that very often. So it's usually 0. Home inspection, you go, well, where in the world did you get $1,500 for home inspection? This particular home is an older home that's been maintained okay. But I bet you there's going to be some, when in the due diligence period, they may ask for some repairs. So I like to I do anywhere between 500, 1,500, somewhere to give them an idea, because remember, even though they're going to pay that out of pocket, it's still affecting their total net. So I want to make sure that they get what's happening. Now, what will happen is usually that they're paid outside of closing. But what happens if that closing, that the HVAC guy says, I'll bill you at closing, and it comes on the closing statement. So I always put that in there so that I know that my net should be somewhat accurate. Does that make sense to you all?
Yes.
Okay, great. Now, real estate brokerage fee. Nobody messes this one up, right? Nobody gets this one wrong, because it's really whatever you have agreed upon, both for yourself and for the selling agent. So that figure, if you're going, well, I really don't know because it depends what the price ends up at. Again, this is just a beginning. So your beginning is always what you're going to list it at. Okay.
Mm-hmm.
Document prep fees on FHA and VA. I usually put in between $100, $150. Again, it may not be that much, but if you put that number in, you can't go wrong. Then prorated to the buyer, prorated rent to the buyer, nothing. Unless you have that situation, it's rare. Security deposit, I've never in all my years had that. So I put 0. But again, you'll know if someone is a seller and they have a tenant in there because it's not owner occupied, come to me and we'll go through those numbers. Other, you can put all sorts of things, but usually on a listing, I suggest that they be prepared to offer a home warranty. And in this case, we did $580 for the home warranty. I mean, they can run different prices, but again, this gives the seller an idea of what to expect. What if they don't pay for a home warranty? What's the harm here? Anything?
Michelle,
Yes,
I have a quick question. Do you mind if I go back up 2 lines to the document prep fees?
sure.
Would those be charged by the bank? Would that be like their payoff fees, or who's charging that?
You know, it's the bank. Thank you for asking that, Marla. It is the bank or the lender, I should say. On FHA, for instance, the buyer cannot pay a flood certification fee. That runs about $72 to $75. They can pay everything else, but that's one fee they can't. So that's why I say I always use that 100 to 150. On VA, the seller has to provide, well, the seller doesn't have to provide, but a termite letter is required. And that's not doc prep fees, but I'm just kind of cushioning numbers.
Okay.
There are certain, and what I would do is I would get with your lenders of preference, whoever you feel like you'll be doing business with over the long, and say what fees are required to be paid by a seller for FHA and what fees are required to be paid by the seller on VA. Does that
Okay,
answer it?
Well, yes, and it just raises another question. So this would be fees that the buyers can't pay, or is it fees from the sellers paying off the seller's mortgage?
It's what they can't pay,
Okay,
what they cannot pay.
thank you.
You're welcome. Doesn't have anything to do with the mortgage itself. So another that you could put in there is if there's a payoff fee, there's recording fees at the county. I mean, you can get into minutia as you know more and more, but at this point, I don't want to get into that because remember, we've kind of padded certain things. And that's why by doing so, if there's small adjustments here and there, it should not wreck your numbers. Are we good? Does any questions on this area we just talked about?
I have a quick question. Going back to taxes, so number 10 and cost of sales, unpaid property taxes. So I might be wrong, but does most of the homeowners pay the property taxes in advance?
No.
Or am I wrong?
That would be, no, it's a good question, but no, most of the property taxes are paid either after the fact or somewhere in the year after the fact. So when Cherokee County, for instance, pays this December, it was for the entire year of 2020. It wasn't, when they pay in December, it's not going forward. It was for the entire 12 months prior to December. In Cobb County, the tax bill comes out in August, but it's for January 1st, 2020 through December 31st, 2020. So in that case, what gets a little tricky is, let's say they closed in October and that taxes had already been paid. Well, then the buyer actually owes the seller for 2 months that the seller has already paid.
Okay, that makes
So
sense.
that's why, yeah, good question. That's why you want to know an idea of when those taxes are due. Now, if in this case, that if this closing were taking place in October, I always check, and I don't want to get too confusing, to make sure that the attorney checks to see if the taxes have already been paid, because you don't want to pay them twice. But again, come to me and say, okay, here's the scenario. Let's walk through each one. And as you have a specific situation, it will make more sense. Okay.
Okay.
There's all sorts of little moving things that are happening. But if you had figured too much taxes, that's not any harm. They're just going to get more money back because you don't ultimately do the payoff. The attorney does all of that and calculates that. You're just getting them to making sure that they can either have enough money to close, or that they're not bringing money to close, or if they're buying another property, that they have enough money to go on and do the next property. Okay, those are the two main reasons you do it. On credits, I never do anything on credits because the lender may be holding money for taxes and insurance that they have collected throughout the year. It is too complicated. Leave it blank. Tell them, if they say, well, I've got an escrow account, tell them check with your lender and see that based on this closing date, what you should expect to get back, because that is all that I'm going to tell you there. Otherwise, it is confusing. It's not challenging once you kind of get this, but you don't need to add another layer into it. And they won't get it back at closing. They get it back once the lender gets the payoff, and they get it within about 30 days of closing. So you don't want them counting on that money. All right. That's just a windfall. And I have many a spouse over the years call and say, oh, we got it back. I didn't tell my spouse, and I'm going shopping, or I'm going to do some, but I do tell them it's coming. So let's look at this again. So we've got a $375 estimated sales price, right? We've estimated a closing date. And so when I calculated the payoff, I subtract 239, 280, 05 from 375. Then I go to subtract the cost of the sale, which is 26,289. And that means that if all things hold true, they will net $109,430.95. Any questions how we got to that number?
No.
Okay, so let's go back up and make sure we've covered the things that we needed to cover. We talked about when to prepare a net to seller. So when a contract comes in on this property, would I do another net to seller? Let's just say they say, this sounds pretty good, we're going to accept it. Would I do another one possibly?
Yeah.
Yes.
Yeah, I would. Especially, what's cool is when you've used these numbers and you go, oh, they're only asking for $1,500 in seller paid closing costs. Oh, your net will be better. Oh, this, that yours is not yours is a conventional loan, not an FHA. So these are the things that's why you would do them twice. We looked at reading the mortgage statement. I said, look for clues for the balance, the escrow. We didn't talk about that, but I'm going to flip down real quickly and show you where you see the escrow. See where it says taxes and insurance? Paid year to date. 1,070. Well, if they weren't selling this house and they haven't made a total of 6 house payments, are they going to have a big old whopping tax bill that they're going to have to make that differential? Yeah, I mean, there's other things that are happening, but you can just look at that and just say, check with your lender that if we close on the 20th of October, of August, what you might be getting back. Leave it at that. So here we've got principal and interest. We showed you where the principal was, the interest was. We talked about calculating, looking at taxes. I always pull the tax bill. I do not go off of that. Insurance, really you don't need to worry about that. So cross that out because the insurance is going to stop the day they sell that property. There'll be money potentially coming back to them for unused portion. Taxes are paid usually in arrears. Insurance, they want to bill you before you've ever gotten your coverage. So again, as time goes on, these are good conversations to have with them, but not when you're getting started. So just kind of bracket those and just go, TBA, I'm going to learn about that later. And then we looked at the next payment date. And so when I went down, I said, oh, this payment date is June 1st. So we know June should have been paid by now, correct? We know July should have been paid by now. I know better. I know it hasn't been. So that's why I came up with that big whopping number. And then August will not have been paid by then. And then there'll be days in August because mortgage payments are in arrears. That is the most difficult thought process for most people. Does that make sense for you?
Mm-hmm.
Okay. So in this case, we talked about that. And what you can do is print out what I have used and circle, take this sheet and circle through where these things are. That's what I did. I go, okay, if I need to know what the balance is, I'm going to circle this and I'm going to name that A. And I'm going to take that sheet that I was given and I'm going to do A. Now, do all mortgage statements look identical?
No.
No, just like when you go to find on something at the grocery store where it says sell by date, you're looking like all over the place. It gets a little more difficult, but you'll get used to it. You'll kind of know the direction to go. So then I put net to seller form, cost of sale, line 16 other. Remember we talked about warranty, the home warranty?
Mm-hmm.
There could be that they might need a survey or that they might need to get a termite letter or they might need to get a termite bond later. These are all things where you can put other, because when you do get a contract, where would you find what the buyer is asking for in addition to the contract?
Special steps.
Special steps, exactly. So don't miss that. So many people, I've had agents come and go, oh, I missed the special steps. I calculated what their closing date was, what they asked for the seller to pay, and I forgot about the special steps. And now there's a home warranty and there's a termite, and it adds up to about $1,200. What do I do? And I go, I think I know what you do. What do you think the answer would be? What would you do if you missed it and you advised your seller incorrectly? You pay it. Is the correct answer. And have I done that before? Oh gosh, yes. And it's a valuable, sad lesson.
Yep.
When you're going, oh gosh, I just cost the seller $800. So that's why it's so important to have a good discussion, because if you're not looking for these things, now, are there people that go, oh, sorry, Mr. Seller, I said it was a net? Not a good business practice, because that you're the one that is the professional. So that's why I like to point this out. And we talked about why to leave credits blank, because that's money that they're not getting at closing. It comes after the fact. So is this harder than you thought it would be?
No.
No.
Okay. Is it complicated, but now you kind of, you know what to ask, correct?
Mm-hmm.
Okay. So we've got about 5 minutes. We can either end, or you can ask questions, and I'm happy to answer them.
So Michelle, if we're sitting at a listing presentation
Yes.
and you come up with a sale price of 400,000 or something, and then you get all the information from them. Okay, what do you still owe on the house and all that jazz.
Right.
I mean, obviously you can leave and then get with you even and just say, can you help me out with this? And
Correct.
then back to them. I mean, it's not like you have to right then and there say, okay, let's hurry up and calculate what the net to you is going to be.
Don't do it. Don't
Okay,
do it
yeah.
while you're sitting there, because then you'll get brain freeze.
Yeah.
If you haven't done it enough. That's a great question, Joanna. You all, here's your conversation to make you feel comfortable. Thank you for giving me your mortgage statement. I will pull your latest tax bill, because they don't need to do it. You have access to it. I'll pull the latest tax bill, and I will then, in the next 24 to 48 hours, get to you what I would estimate the net to seller, and then let's go over it. But what I do at a listing presentation is I take a blank one of these. This estimated net to seller is a GAR form. It's F837. So I take a blank one and I say, let's just go through what you will expect to see, so that you're familiar with it, because you might end up doing this on Zoom, like what we're doing, with all that's going on. And so they're going to say, well, why am I paying $3,000? Well, remember we talked about, I'm just going to use a number that I've looked at what's typical in your area. Now, doesn't mean you have to pay it, but let's figure worst case, because we want to make sure that you net what you expect to net, or that you hope to net. So you can actually, by taking a blank one, have a really good conversation before you've done it. Okay, what else? What other questions?
If we haven't had any a lot of transactions, how can we come up with the average closing cost? I see that you came up with 3,000 because you have a knowledge of what is the ongoing market rate or whatever. How do we come up with one?
Well, you know what? That's a wonderful question, Krishna. If you were doing a buyer's net, I would never do the buyer's net, first of all, because the lender's supposed to do that, correct?
Right.
And so we're depending, but on the cost of sale, all I'm doing is going into FMLS, and I'm going, okay, now for instance, I live in Chimney Springs. I'm going to look at what's have sold in the last 6 months and how many seller contributions there were, because I can go through the closed transactions. So if out of 7 transactions, it averaged out to 3,000, maybe one was 0, maybe one was 6,000. I'm just taking an average, that's all. So you don't really need to know because you don't have, that's not going to be your responsibility. It's just to kind of look at what's typical that buyers are asking for, and that they're paying.
Michelle, and just in general, can you just give us, for example, an idea? What is really the closing cost? I know it's lawyer. I mean, what is it?
Well, closing costs depend on and the best answer is going to be check with your lender. But here's what I know what you're asking. You said, give us an idea. There are certain costs that never change. An appraisal for a $200,000 home could be the same cost as an appraisal for $400,000, correct? Now, $1 million home, the appraisal is going to be higher. But usually what I say is there's certain costs that don't change. Your recording fees at the county don't change. Doesn't matter if it's a $50,000 home or $1 million home. So get with your lender and say, what fees never change? What fees conventionally never change? What fees FHA and what fees VA? And now this is more important if you're working with a buyer than it is a seller. But there are certain things that change based on the sales price, just like our commission changes on the sales price, does it not? 3% of 100,000 is 3,000. 3% of 200,000 is 6,000. Yeah, and the reason I'm reluctant to really get too deep into this is we work off of sales price. Your buyers are working off loan amount. So those figures change, but people will say, well, if I put 3% in, am I safe? Well, if you put 3% in for 500,000, no, that's way too much, $15,000. So you want to, the thing that will point you out as a new agent is to have a crazy percentage in with that number. Again, I mean, I can give you an idea, but the best person is going to be the lender because they're the ones that number relates to. So easy